Hello, everyone. Welcome to the 21 Hats podcast. I'm your host, Lauren Feldman. This week, Sarah Segal takes Paul Downs and Jay Goltz through her recent QuickBooks nightmare. Right before tax season, Sarah ran her P&L and it showed a profit of $250,000. But she knew right away that couldn't be right. It then took a bookkeeping SWAT team to figure out what exactly had gone wrong. I was literally on the verge of tears, Sarah tells us. How am I going to do this and not be late on filing my taxes? And credit to this woman who was, I swear to God, she was like my therapist and my bookkeeper. She was like, "Don't worry, Sarah, we're going to figure it out." Which they did, and which brings an important reminder. Not every dollar that comes in the door should be counted as revenue. Plus, what do you do when a new employee isn't working out? When is the right time to intervene? Do performance improvement plans actually work? Are grace periods a good idea? Also, Jay emphasizes a little understood reason why it can be important to fire fast. And Paul explains what he likes about the AI search engine, Perplexity. Even in good times, owning and running a business can be a lonely pursuit. Our hope is that these weekly conversations, brought to you by our principal sponsor, The Great Game of Business, will let owners know they are not alone in facing challenges. Same thing with our daily newsletter, the 21 Hats Morning Report, which Inc. magazine named the best newsletter for business owners, and which you can subscribe to for free at 21hats.com, where you can also find transcripts of our podcast episodes and lots of other articles and interviews. Joining me this week on the podcast are regulars Paul Downs, CEO of Paul Downs Cabinet Makers, which is based outside of Philadelphia and makes custom conference tables. Jay Goltz, CEO of the Goltz Group, whose companies in Chicago include a picture frame business, artist frame service, and a home furnishing store, Jason Home. And Sarah Segal, who's founder and CEO of Segal Communications, a public relations firm based in San Francisco. The episode is titled, "You Need to Accept That You're the Boss." Welcome, Paul, Jay, and Sarah. It's great to have you here. I want to talk today about taxes. We recently had a conversation on this podcast about what business owners should expect from their accountants. We talked about how some owners think they're getting strategic advice when they're really just getting tax prep. In that conversation, we talked more about the strategic side of the equation. Today, I'd like to talk about the tax prep side. We just passed April 15th. Sarah, we exchanged some emails. I gather you've had an especially stressful time. What's been going on with you?
Well, as you know, I restarted my company at the beginning of 2023 after having been part of a larger entity for a couple of years. So I had to restart everything. I had to reestablish my LLC. I had to open new bank accounts. I had to get new healthcare, all that kind of good stuff. And I was like, you know what? I've used QuickBooks in the past. And when I first ran my company, I'm like, I can do it. And I'll just get my friend to help me out here. And just in terms of the data entry, and I can figure it out. I'm fine. So instead of finding somebody like I should have, that is skilled and understanding of how agencies run, how a pass-through LLC works, I did most of it myself with a little bit of a help from a friend. And I really, profanity here, myself over completely. So I ran my P&L at the end of the, right before tax season. And it said that I had $250,000 in profit. I did not have $250,000 in profit. The way that all of the details were put in were incorrect. And apparently I had been adding all this stuff, all of my transactions, not on an accrual system, meaning that as soon as I invoiced somebody, QuickBooks thought that was money coming in, as opposed to the way it works for us, where we invoice somebody, we don't get the money for 30, 45 days, sometimes even later if there's any problems with the transaction. So it thought that we earned more money than we did. So long story short is I was introduced to another agency owner. He loved his bookkeeper. I had met her casually, and I basically onboarded her and her team really quickly. And they spent the last 3 or 4 days literally doing surgery on my QuickBooks. And I'm sure that the bill for that is going to be 10 times the amount had I not just done it the right way the first time. And I'm kicking myself.
Wait, there's a lot to unpack there.
Yeah.
I got to ask, because I have an accounting degree, I never practiced, but I got to get some clarity. You said that you booked it as a sale, but then it really wasn't. So the question is, are you operating on the accrual basis or on the cash basis? Which one?
You're smarter than I am in terms of this stuff. But
yeah, clearly she doesn't know the difference.
I didn't know that there was a button to click.
I know nothing about the whole button to click thing. I just know that maybe you did make the money. Just because you haven't collected the receivable yet didn't mean that you didn't make. I'm not so sure you didn't make the $250. You just don't have the cash yet because it's in receivables.
No.
Okay, wait a minute. Can we just step back here one thing and talk about, there's 3 different ways she could have screwed this up, and I think you got all 3 of them.
I'm sure I did.
One is not understanding the difference between cash and accrual. Second one is not understanding QuickBooks. And the third one is not understanding taxes. And so that if you venture out on your own as a business owner into this field, you're entering a landmine. And it's really critical right when you start to get professional advice. And then once it's up and running, then yeah, you could probably do QuickBooks yourself if it's a small business. But it's critical that you don't try to do either of those 3 things yourself, because you will never get it right.
No, I totally agree with you. And I have to say that I was reading an article the other day that talked about like the 2 professions that a small business owner will never question the authority of or the value of is legal and bookkeeping. I try to sell our services. People will question us like, really, am I going to get value out of it? People do not question lawyers or bookkeepers. There's a reason about that.
I've talked about this before, and I don't blame it. You just assume, oh, they're an accountant. They know what they're doing, and they probably know what they're doing with taxes, but some are great at helping small business owners, and some will watch you hang yourself and never, and then they'll tell you later, oh, well, here's your problem. And I understand why people get into that trip. You just assume they're a professional accounting firm. They're going to help me with this, and sometimes they do, and sometimes they don't.
All right, so let's go over this a little bit. I want to walk through and make sure we understand your situation.
Sure.
Before I do that, Paul, the difference between cash and accrual accounting is?
All right, here's my understanding. I am not an expert. I'm not your bookkeeper. I'm not your accounting. Right? So cash means that you book as income payments you receive for work you completed. In other words, you did a job, you get paid for it. Not based on invoicing, just on what comes in the door, but only for stuff that you've actually completed. So in my business, we get a lot of deposits for work that's not completed. And you might think that that's cash income. It isn't. It's just a loan the client makes to me until we deliver a table.
It's actually a liability.
Right. It's a loan. It's a liability. And at the point where we've completed the job, then whatever cash they've given me converts from a liability to income. And if we deliver a table and they still owe me money, the amount of income we book is based on when they pay us. Accrual, different. The accrual is looking at the value of the work you completed. That's it. And so you can book as accrued income anything that you've completed, whether you've been paid for it or not. Now, just like with cash, the liability of the deposit becomes a income after you accrue, like, okay, we completed this. In our case, it's when we ship it, we book it as done. And then we have income based on the cash that's there. You can be looking at in QuickBooks at either or both anytime you feel like it. When you run a P&L, there's a little button on the upper left side that says cash or accrual. The critical thing is which you're paying taxes on. And this is my understanding, could be wrong. Accountants correct us. My understanding is this is a designation you're going to make when you set up and file your company originally. You're going to make an election to take either cash or an accrual in accounting. And I believe that cash is way more common for S corporations, particularly someone in Sarah's situation.
Well, maybe.
All right.
Just because she doesn't have inventory, that's a critical thing. So somebody with inventory would never do that.
Right. No, I don't. I have pretended for the last 38 years that I have no inventory at any time. So I don't know anything about accounting for that, because it's just way simpler for me to not have inventory. Yes, we have materials, we have work in progress, but it's really difficult to value it. So we just don't. And my accountant has never complained about it. But if you were in QuickBooks, making a note, hey, I sent an invoice to this person, and booking it as, it's almost like an accrued thing then, that you book that you completed the job, I'm sending the invoice, that's accrued revenue. And if you were running the P&L and it was saying, okay, that's revenue, that's your income, then you probably have QuickBooks set up wrong. It shouldn't be that hard to have the new bookkeeper, as long as you've entered everything, all they have to do is go back and recategorize it.
Yeah.
Just to be clear, you left out half of it, which is, you're totally right with the first half. The second half is your expenses are also accrued, meaning if you get a $10,000 insurance bill for the entire year in cash, you would write the 10 grand up. An accrual, you'd separate it by 12 months and do prepaid, and it would be amortized. So it works with both the incoming and the outgoing expenses.
Right. Didn't even think about that. The other thing would be depreciation. Let's leave that for a different discussion, because the whole thing is that don't try to do this yourself. Just don't.
No.
Well, so Sarah, I want to go back to exactly what happened. You said that you took your P&L. It showed a profit of $250,000. You didn't actually make it, you said, but it sounds like maybe you did. What triggered your sense that you didn't actually make it? What went wrong and that you realized you had a problem?
Well, my bank account's not that full. That was.
I knew you were going to say that. Except over receivables, isn't it possible that income is just sitting in receivables?
No, it's not. We were income in, income out last year. It was our first year back up and running. Like there was no major profitability. It was nominal. It wasn't my goal of 20 to 30%. But I knew that number was wrong, like just immediately. Because we're a pass through, all of a sudden, like the tax bill that I owed to the government was absurd. So we realized that it's so important to find an accountant or a bookkeeper that understands agency, because unlike what most people do, we do things where we have expenses that we incur on behalf of the client and then bill back to the client, right? And unless you categorize things correctly, it can show as income, right? So for example, Jay, you're like, you know what, Sarah, I'm going to do a big partnership with the city of Chicago. We need to put out a press release. I say, okay, great, Jay. I'm going to write the press release. That's my service. I'm going to put it on the wire. So Business Wire, PR News Wire. It's a news distribution service that goes to every newsroom in the country. That costs me $1,500 to $2,000. I'm going to front that cost. I'm going to put it on the wires. I'm going to bill you back for it. But my books, the way that it was set up, saw that money is coming in as income and not as a reimbursement. And so that all had to be redone.
So wait. So does that mean you didn't show the expense for that? That's what would have countered it. You took the money in from the client, but then they didn't show the payable. Is that the problem?
That was the problem. And because there are so many like specific nuances to PR, for example, like paying an influencer. Some of these influencers, you have to pay through Venmo or PayPal, like if you're doing a paid relation. It's really messy. Like you're not just sending people checks at this point. So I did finally, things are worked out now. The number is much more on par, but I have to say that like I learned from my mistakes that, you know what, there are certain things that you should just not do as a business owner. And honestly, I wish there was a boot camp. Like everybody I've ever talked to that went to like business school was like, oh no, they just teach you theories and case studies and this and that. Why can't they have a class or just like a 1-year program where they're like, this is how to manage your P&L. This is how to deal with expenses. This is the difference between accrual and cash. Like, where does that exist?
I have a business degree. They didn't teach any of this, but you just brought up something very important, though, which has made this way worse. It's about the fact it used to be in the old days, you got invoices in the mail and there'd be a pile of papers on your desk from whatever you fronted the money for. you'd have an invoice and the bookkeeper would say, oh, we got to put this in. Now, to your point, maybe they didn't even send out an invoice. You might not have an invoice, or maybe they sent an email and it didn't get to the right place. So I have that problem now. Everybody's not sending invoices like they used to. And like, oh, you sent me an email? I didn't get it. Or, oh, you sent it to there. Or maybe your person quit and you didn't forward the thing. At least when you got the mail and it was on paper, there was a pile of invoices sitting on the desk. And that is no longer the case. That's a huge problem.
But now imagine this, but you have 15 clients that you're doing this for. It was just, I was literally on the verge of tears of like, how I'm going to do this and not be late on filing my taxes. And I just credit to this woman who was, I swear to God, she was like my therapist and my bookkeeper. She was like, don't worry, Sarah, we're going to figure it out. It's going to be all okay. I'm like,
Sarah, how were you doing it the previous year when you were still part of a larger business?
oh, they had somebody qualified doing it.
So you were just sending all your information. I mean, were you on QuickBooks? How did they get the information?
A lot of emails and Dropbox folders full of receipts. And just that, I mean, it wasn't systemized as I would like it to be. We are pretty good about putting all of our receipts and stuff like that into folders.
Okay.
So the new bookkeepers has access to everything and it is able to see everything and go through it pretty easily to review it. But yeah, no, somebody else did it. And I don't know how they worked their magic, but it's magic. It's a magic job.
It's not a magic job. It's just a job. It's just something you have to get your head around. You're like, okay, you don't want to deal with it. Fine. You're going to pay $1 billion taxes. But this is just part of being a business, which is dealing with transactions, money. And, yeah, Jay, I'd love to go back with you to 1976 or 1810 when we could get messenger boys to go around town. That's just not the world we live in. It's not an option. And so you simply have to do the things that you need to do to administer a business. That's part of your job as an owner, making sure the administration happens in some kind of orderly way. There's really no way around it.
It's called having control. And until you're out of control, you don't know what you're supposed to be watching. So we brought up several things I'd like to highlight. One is this deposit thing. It is very dangerous when you're in a business that takes deposits that you don't put the money somewhere and you start spending it thinking it's your money. So I know nothing about QuickBooks, but there's lots of places to get into trouble. Deposits, in my case, inventory. You don't have inventory. Very easy to get in trouble with inventory. Very easy to get in trouble with you didn't get all your payables in. Somebody didn't send them to you. You didn't have them. And good bookkeeping people know to keep an eye on that stuff is the point.
While you're mentioning inventory, I got to go back to Paul. I've never heard the notion that you could just pretend you don't have inventory. I'm not sure what to make of that. Could you explain how that works? Because you must have a ton of money sitting in, wood and other types of materials, don't you?
No.
No, I understand that.
No, we don't have a ton of money. We run a very lean operation where basically we get a pile of wood delivered on Tuesday. It's pretty much all put into a product or in the trash by a week later.
Oh,
so in a world of just-in-time inventory management, if you've got reliable vendors, I don't need to carry inventory. As a matter of fact, this is something that always blows the mind of all the people who work for me, which is I don't want to see piles of wood around the shop, and I don't want anything that we're not going to immediately put into a product. Now, in reality, there's probably 10 days worth of inventory of various things sitting around on the shop floor. And in reality, you could probably, if you decided to sniff around, make a case that we should be doing it differently. But the other reality is that it's not something which is likely, as far as I understand, to trigger an audit because I make money, I pay taxes. We just don't carry a ton of stuff lying around. I don't have a warehouse full of stuff like Jay does.
Well, are you missing an opportunity to buy in bulk or to stock up on, wood that's hard to get or, avoid supply chain problems? Are you paying a price for this in any way?
No. The only time we ever really were tempted to buy in bulk was right at the beginning of 2020, when COVID was shutting down a lot of the plywood and other sheet good manufacturers in Canada. And so without that particular material, we were out of business. So I went to my distributor, who we normally buy from, and I say, guys, what do I need to do? I don't care what it costs. We make a premium product. I don't really give a shit about a nickel per sheet or whatever. I just need to make sure I have this. And they said, yeah, we've been doing business with you for 30 years. We got you. And here's what we'd like you to do. We'd like you to buy a couple of skids, which is more than we normally do, maybe 500 sheets. So we bought it and we stored it for a year, but we used it all up. And now we're back to our normal practice, because inventory is really expensive. It's just money sitting on the floor. Like, why do that?
In my case, that's how I make money, by having inventory. I bring it in from all over the world. It takes months to get it, so I got no choice. Now, I should have put some parameters on it, which I didn't, which I've got it under control now, and we're working it down where it needs to be.
Can I ask you too, how do you look at your books? Like, how do you review that? Do you do it like every day you're looking at it? You do it weekly? You sit down with your bookkeeper? Do you do it quarterly? Like, what is your process?
I'm now doing it every week, and I had a CFO for years who was doing it, and I'm now doing it, and I'm keeping an eye on, the key performance indicators. What is the inventory levels? What's the payables? What's the receivables? How much cash is in the account? It's very easy for it to get out of control.
How about you, Paul?
Yeah, I manage cash extremely carefully, and we have a system set up where I can predict my cash position any day in the future for as long as I feel like it, which is generally about 8 weeks. So I'm looking at that multiple times a day, but we're also, like, for me, what's really important is, are we making a profit on accrued revenues? In other words, is the factory making money by what it's doing? And if we're doing that, all other problems are solvable. My clients generally pay me. Like, we don't really have an issue getting paid. And we're very clear on the difference between liability and asset and when taking deposits, but we need those deposits for cash flow. So if I'm taking deposits and sitting on $500,000 of cash, and let's say 200,000 of that is deposit and 300,000 of that is working capital or whatever, as long as the factory is making money on an accrued basis, in other words, the value of the output that we're producing in a given period of time is greater than the expense to make it, then eventually our cash position will be improving, as long as I don't go and spend it on something crazy like inventory. So you see what I'm saying is, you need to understand what you need to be looking at in your business. In my case, it's pretty simple. We need cash coming in the door through sales. We need stuff going out the door through revenues. And I just keep an eye on both of those constantly.
Sarah, in your case, your issue is you got to have one foot on the gas and one foot on the brake at all times, because you're hiring people to do the jobs. If you got enough jobs, great. But then if you have too many jobs, you don't have the people, that's a problem. And it would be very easy to lose a couple of clients and then not make a quick, unfortunately, you can't carry people that long if you don't have the business coming in. And that's what you got to, like I said, is one foot on the gas and one foot on the brake. And in my case, I can absorb it a little bit easier because I've the bigger business and I've got, inventory to live off. But like in your case, you have a couple months in a row where you lost some business and you kept the people too long. It wouldn't be hard to see where you're going to get into a big cash crunch and a problem.
This points out a critical thing that I've learned over the years, which is that business owners need to understand what normal looks like. You could set up any number of KPIs that would help you understand what normal looks like. But you need to know what that is. You need to know, what is normal for me?
Let's say normal and healthy, because you could be normal and be screwed up. Let's say normal, healthy, yeah.
If you understood normal and you understood why it was unhealthy, you'd be on your way to fixing it, right? So, but it's really important that you have an understanding of how your business works. Like, if I know that if I get X number of people initially calling us, I have a pretty predictable yield path. Like, how many of those people are going to be worth talking to? How many are we going to sell? When we sell this amount, how many people should I have on staff? What should my monthly revenues be? How are we getting there? We monitor that with the company, talk about them about revenues. Like, here's what we need to get done this month. This is why.
Your sales pipeline is much different than mine, though.
Well, that's what I'm saying. it doesn't help you to understand what my business does. It helps you to understand what your business does. And you just need to know what normal looks like. And normal may be I have to hire and fire people constantly because I never know exactly how much business I need to do in one day. And so you need to normalize then the hiring and firing of people. That's just your task.
I have looked at if I can hire independent contractors and freelancers that are perfectly skilled at it. Since I did that round of layoffs last year, I actually haven't hired anybody on staff since then. We have grown, but all the people that are in those are like full-time freelancers and contractors, and they are fine with that role. We'd like to bring some on staff who we really, really like a lot. But as I've said this publicly to my team, I'm just gun shy because I don't want to hire somebody on staff only to have, ebbs and floats. I think that we're out of the bad economy scene in the bottom of the bottom right now. We're out of that, but people are slow to hand over contracts. I can't tell you how many people have been like, oh yeah, send me a contract. And then you never hear from them again because they get anxious about spending money on marketing in particular. Marketing is like first to come, first to go.
It sounds to me like the only staff person you actually need is a bookkeeper because that's constant, right? Like I have a bookkeeper. I know exactly how many hours she should be doing a week. She's comfortable with it, but I'm never going to get rid of her because no matter what we do, we're going to have transactions that need to be accounted for correctly. So yeah, everybody is going to develop their business model based on what business they're in, what makes them money, what resources are available to do work. You happen to be in a world where there's a lot of freelancers. When you hire them, you have a pretty good idea what they're going to cost.
Yeah.
That's a pretty common business model, and it's a pretty good one because it doesn't force you to carry people when you don't have business. Now, in my world, it's completely different. The people I have to hire are so specialized, and it takes years to train them that I'll do anything to avoid laying them off. And the way we manage that is through backlog. In other words, we always try to maintain enough of a backlog that if we go through kind of a slow period, we have some work to do while I figure out what to do about it. But I also am so used to understanding what the backlog should look like based on whatever other indicators are coming, that if trouble's starting to happen on the horizon, I can see it because I've seen it before. And then I can make an adjustment if I need to. Like, you know what? If someone quits, it's not a big deal right now. Let them go. We won't replace them. So it's mostly about just understanding what you're doing. And it takes a while when you start up to get that knowledge. It took me 20 some years to know the difference between accrued and cash revenue. I just didn't understand what we were doing for the longest time. So no knock on you.
Here's the good news. You learned your lesson. You'll fix it. You'll move on. And it's all fine because that's what we do. We fix things. So you're going to fix this and it's all going to be good. And you won't go through this again, and you'll continue to learn these things until you're a fine-oiled machine.
Oh, no. And that's how I approach it. Like I with my team as well, like you're going to make mistakes, and you're going to learn from those mistakes, and you're not going to do it again, and I do the same thing for myself. It doesn't mean my whole weekend wasn't ruined because I was sitting there going line by line on on my QuickBooks to see what the problem was.
No, weekend ruin's fine. Just don't let it go for more than a week.
No, I'm not.
And I have a saying: there's no team in losing money. That's the one place that the team, at the end of the day, when we lose money, it's our money, and the team can feel bad about it, but it's more stressful for the one who lost the money.
I want to hit another topic. And this is another one of those questions I saw posted on the small business subreddit, and it deals with how you handle employees who aren't meeting expectations. Let me read some of what this business owner posted. I run a fast-paced warehouse business where a set number of customer orders need to be made and dispatched per day. I have just hired a new starter, and they are horrendously slow. I've already set my expectations, as I do with all new employees, that they need to be able to make X number of orders after 1 week, Y after 1 month, Z as an aim to always be hitting for the remainder of their employment. However, during their first week, I have said that I have no expectations for them other than to just learn where everything is and work towards hitting the X orders per day by their 6th shift. This new staff member is the slowest I have ever seen by quite a long margin. As an example, the slowest staff member we have ever had was able to make 30 orders on their 2nd day. Our new starter managed to only make 13. I'm concerned that they will not be able to hit their minimum quota in a few shifts' time. So when would it be appropriate to step in and give them a hand and show them how to be more efficient, as it is blatantly obvious to me, and it should be to them, that they won't meet the upcoming quota? Ultimately, they are still getting to grips with everything and learning where everything is and all the processes. So I don't want to overwhelm them or make them feel like they aren't doing a good job, but going this slow is extremely concerning. The minimum quotas are extremely achievable. Almost all staff members we have ever had are able to hit 50% to 100% over the minimum every day. Any advice for dealing with a new employee?
Okay. So the answer to his question, should I intervene? Absolutely. He should interview right now, and he should say, listen, we have a minimum standard, day 6, you got to do 30. And I'm going to sit here and watch what you're doing, and I'm going to give you some tips. And if you can't make that on day 6, see you later. I mean, you could be nicer about it, but that's basically it. When you have experience, when you've seen X number of iterations of something, and the next one you see is an outlier, it's real. There are slow people on this earth. And it's his duty as the boss to just give them the feedback, set the expectation, and be ready to get rid of them.
I laughed out loud when I read the part that he said, well, I don't want them to think they're doing a bad job. They're doing a bad job. I mean, what do you mean? That you don't have to make them feel bad. My line would simply, listen, this job isn't for everyone. We've had lots of people. I'm not sure I could do this job. There's lots of people that just aren't suited to do this. You don't have to make them feel bad. You can just say, I'm concerned this isn't the right job for you. That's an accurate statement. And they, in fact, might be a great employee doing something else somewhere else, but they just aren't suited to do whatever he's doing.
Slow is usually a problem, I will say.
You run into this problem again, you can hire with a grace period, right? Okay, we'll test you out for a week, see whether or not you can make the numbers.
Don't do that.
No, you wouldn't do that?
Don't do that. No, because if you actually have a written grace period policy, it becomes much harder to legally get rid of someone for any reason afterwards.
Oh, okay.
Wait. Explain that to me.
Yeah, like if you say, hey, you're on 90-day probation and they get to day 91, then all of a sudden they've got a defense in a firing that they didn't have before.
Or you're just, the fact of the matter is there's times where you hire someone on the 2nd day, you realize I made a mistake. I mean, they sit at lunch and they tell people stories that you think, oh my God, seriously? You just told them that you killed someone last week. And people tell stuff at lunch.
Yeah. I hired a guy who tried to persuade my whole logistics crew to go down in the loading dock and get high with him at lunch. And they came and told me about it. And I didn't give him 90-day grace period. I said, get out of here.
No, and that's, yes, absolutely. So there are times where on the first, second, third day, you realize, yeah, this wasn't a good hire. So we don't owe it to anyone to give anybody any grace. They can walk out of the job after the 2nd day. They're giving us a grace period. That's the way it works. They come in, you see if it works out. If it works out, great. If not,
you have to do it, because otherwise, you're giving your time to something that you shouldn't be giving your time to.
I also heard the word, and Paul, you used both words. I don't use expectations because everybody has different. I use standards. Here's the standard. We believe that you should be able to do so. And, everybody can have different expectations. I think the word expectations has replaced standards in a lot of time. And I think in many cases, standards is a better word.
I don't disagree with that. And actually, when you're talking to employees, if you've made up a bunch of rules for the company that are whatever you felt like doing, always talk about them as if they were descended from God on golden tablets. Just like, hey, these are the rules, man. Okay, I wrote them. You don't have to emphasize that part. Just say, these are the rules. You got to do it. Leave it there. People are much easier to take that. Because if the rules seem like they're completely immutable, that's a much easier conversation.
Do you use, I think they're called PIPs?
I do.
Performance improvement
plans or whatever they are?
Yes, if it's someone who's worth salvaging. Now, this is a brand new...
Personal opinion is once you're on one of those, there's no swimming upstream. Like, it's done. You're DOA.
Unlikely. I agree with you. Unlikely. Maybe once in a while that might work. But I did a speech to a big company one time, and at the end, they asked me about him. And I said, you know what? In my world, I've learned that either fix or fire. Either I can fix it, or I have to fire them. But putting them on that when they're probably not going to work out, that's like torturing someone. And that's like a big company thing.
Total torture.
Oh, you seem to think it's more likely that it can work.
Yes, because what I've had is I have employees that have been with me for decades. And so you get someone who's a good employee and they work great for 15 years, and then the marriage falls apart or, like whatever, and they go through a bad patch. And that's when a performance improvement plan will work, which is you sit them down, you say, here's the problem. I need you to fix this. I don't want to fire you, but I will. But here's what needs to be fixed. And I've had success with that with people who had demonstrated that they could do the job first. Now, a new hire that's 3 days in and can't do the job, different situation. But if you've got valuable employees and they're starting to go off the rails, I think that at least informing them that they're off the rails, we need to get you back on. Here's what we're going to do. Here's what you're going to do. That's worked for me on multiple occasions.
Absolutely.
I worked for an agency, and I remember that there was this one woman who had been promoted to a manager role, and she just wasn't commanding the respect or delegating like she should. And I was told that I had to put her on one of these performance plans. And it was quite obvious that she wasn't going to be able to do the job. It just wasn't in her nature. And it was like 6 weeks of torture for this poor person before she was let go.
Oh, for everybody.
Oh, it was awful.
Now, I've never worked for anybody, so I don't have that perspective. So I did a speech to a big company talking about the whole entrepreneurial view. And some guy walks up to me afterward and he said, and this is a major company, you'd all know who it is. And he says to me, you know what, at blankety blank, you pretty much have to kill someone to get fired. And I realized at that moment, that is one of the secret weapons of small business. We can take responsibility and make sure the people we have working for us are doing the job. And in many large corporations, they don't fire people. They just move them to another department and roll their eyes.
That said, Jay, I have spoken with a lot of business owners, and I think the one who wrote this thing for the small business subreddit is probably one of them, who struggle, especially early on, with having those tough conversations. They're squeamish about it. They're reluctant to say what needs to be said. I'm curious, did all of you go through that period? Did you have to learn?
Absolutely.
And what got you over the hump? What got you to the point where you realized what language to use?
Well, it wasn't the tough conversations with people, right, on staff and employees, because I've never had a trouble with that. Because as a reporter, a local reporter in a small market, I was often told by my news director or my assignment desk, this person just got killed. Go to the house of the people who's just lost somebody and ask them for an interview. And to me, that was the worst experience of my life the first time I did that. I had to go knock, hey, your teenager just got killed in a car accident. Do you want to talk about them on camera for my news station? Ever since then, someone's like, oh yeah, they have cancer. I'll be like, oh, what kind of cancer do you have? Like, I have no trouble having those difficult conversations with anybody.
You become a warrior. I mean, that's the reality.
Okay, I don't have that experience, but I learned to be tough when I had an employee who was screwing up and I was afraid to fire him for a lot of reasons. And then one of my other employees came to me and said, if you don't fire that guy, I'm quitting. I was like, okay, well, I know which one's more valuable. So I sucked it up and had the conversation. Since then, I've developed a whole written format for these so that it's easy to have the conversation because I'm basically following a template every time. And that is something that is true of so many situations in small business that you're going to run into intermittently, not always, but you're going to do it more than once. If you can just come up with an approach that can be deployed whenever that thing comes up, your life will be a million times easier.
I can tell you, just saying to the person, Bob, I'm talking to you about the same thing now for the second time. I have to tell you, I'm getting concerned. This just might not be the right job for you. And then sometimes they leave on their own. But I will tell you that optimism is the gift of the entrepreneur and also the occupational hazard. And the problem is, I would hire somebody And then the other managers, we talk, how are they doing? Yeah, I'm not sure they're going to work out. What do you think? 50-50? Yeah. So we had this conversation 30 times. What do you think? Well, I'm down to 20. Oh, it's been a good day. I'm up to 80. So we'd have this conversation. And I finally realized after doing this for a couple of years, do you know how many times they worked out? Zero. When I started playing the odds game with people, what do you think? Not one of those people ended up working out. So now I realize when you're starting to think about it, yeah, they're not going to work out.
No. Well, it's the question of looking at your team and your staff and be like, would I be bummed out if they left on their own? And if the answer is no, then probably that's not somebody who's having any real added value to your overall company.
How about relieved? How about they quit? Would you be relieved? Yeah.
Another way to have those hard conversations, if you're not able to have them, is that you start the conversation and then you have somebody else finish it, right? Where you're like, I don't think this is going to work out. I'm joined on the call with our general counsel. They're going to take you through next steps. Where you're like, you only have to deal with that first couple sentences if that makes you uncomfortable.
Or get comfortable, get out of your comfort zone, get comfortable with it. I mean, that's the reality. You know what? Accept the fact you're the boss. You're going to have uncomfortable conversations with people. That's your job. I mean, Paul, am I wrong?
No, you're absolutely right. But one of the things that you guys asked about whether you would be horrified if someone left, there's two aspects of that answer to me. One is there anybody else who can do what they're doing, which is really important. So you could be horrified if someone decides to leave, even if you hate them and they smell bad and they insult everybody else all day, if they're doing something you don't have anybody else to do. That is on your plate as a business owner to make sure that there's always a backup ready to go for every single critical role. And that way, you can enter those conversations with an easy heart. Because if you do need to get rid of the person, you're not screwed.
How realistic is that, Paul? Do you have somebody who's a backup for every critical role in your business?
For everybody but me. It becomes easier as you get past about 10 employees. And it's a numbers game, because by the time you get to, say, I have 26 right now, it's pretty feasible to have multiple people doing all the things because there's already multiple people doing all the things.
Jay, do you have a backup for everybody in a critical role?
I can't tell you that I do for every job, because the fact of the matter is I've got people doing a lot of stuff and making really solid money. And to go have someone backing them up would be extremely expensive. So no, I can't tell you that there aren't some people that if they left tomorrow, that wouldn't be extremely upsetting. Though here's the good news. It has almost never happened to me, meaning I keep people around for years. I keep people with me for 20, 30 years. So if one of the key people quit or God forbid something happened, yeah, that could be very stressful, but I can't afford the luxury of having a backup in every job. So I certainly agree mostly with what Paul's saying. If you can, I certainly do plenty of jobs where there's someone else that can step in.
Well, it's a goal. It may not be easily achievable, but
no, for sure. For sure.
We set it up where everybody has a partner in crime, and that's more or less about people leaving, but more if someone wants to take a day of PTO, that there's somebody else that's looped into everything that you're doing. So if something comes in while you're off, you're not having to worry about you can take a day off without stress.
Jay, you had a situation that you talked about here on the podcast where you had to fire someone for misbehaving, and there was someone in a critical role, and you weren't concerned. You were concerned you didn't have somebody to step in and take over. How did you handle it? What happened?
Worked out great. We had a woman that was in the department for years, and you know what? We gave her the opportunity and we backed her up. It's working out very nicely. So I would say this. Here's kind of a good test I've learned. And, I have a large organization from top to bottom. There's a big spread. I know I got a problem if the pay scale is more than 20% between layers. Like you're paying someone $100,000 a year and the only people reporting to them make 45. Boy, if they leave, that $45,000 person is absolutely not going to be able to step up to the 100. Whereas if you got somebody at 75, 80, they probably can do it.
Before we go, I want to go back to one issue raised by the person who wrote the question on Reddit. We all agreed here that a grace period or a probationary period is a bad idea. But Jay, you've told us here a number of times through the years that it is important to keep track of how much time has elapsed since somebody started because of unemployment issues.
Absolutely.
Remind us again why that matters.
This is Illinois. In Illinois, if you have someone work you for 25 days and you end up, firing them, they weren't working out, you have zero exposure. If they're there 30 days, you have bought the farm. They could have worked at U.S. Steel for 30 years. You're picking up all of the unemployment exposure. And in my case, I did the math. If I fire someone on the 35th day and they don't go looking for a job and they take it out full tilt, that's going to cost about $30,000. And the problem in business is you don't get a bill from Illinois saying, hey, here's the $30,000 bill. It goes into your unemployment rate a year later and you don't notice it. So I'm suggesting to everybody, you should know what the unemployment rules are in your state and make sure that in some states it's 60 days, in some states it's 30, some states it's 90. You should make sure that before you hit that period, if they're not working out, you get rid of them before, because if you just wait a few days later, you're paying out $25,000, $30,000, $40,000. And like I said, most people don't even see it because it just gets buried in their unemployment rate. So their unemployment rate goes from 3.2 to 3.6. And most people are not paying attention to it.
Jay, I'm sure some people aren't paying attention to it because they don't even realize that they're on the hook for it.
30 years ago, my unemployment rate went to the maximum, 7.2. Now it's pretty much at the minimum because we very seldom are paying unemployment because A, we're way more careful who we hire. B, we got the 28-day rule. 28 days, we make an assessment. Do we think this person's going to make it?
What do you search for in Google? I'm curious because I don't know this.
Here, in your case, you're in California. You should search for eligibility for unemployment in California and see what comes up. Like I said, I think in Florida, you've got 90 days, which would be much better. You can give people a longer period, but 30 days is not a long time. But I will also say, even with 30 working days, I think you should have a pretty good idea at the end of the 30 days.
I asked 2 questions about Pennsylvania using Perplexity AI, which is a pretty good AI search engine. And they've given me an answer, which I believe is true because it jives with my experience, that Illinois and Pennsylvania are just different. That you hire someone in Pennsylvania, like it doesn't matter. There's no grace period during which you can chuck them and then there's no liability. It's just not that way. Actually using an AI search engine is going to help you because it's really difficult to just wade through, state unemployment sites and actually tease out what you want. Now, you could get the answer in a digestible form from an AI search engine and then send it to your lawyer and say, hey, is this true? Just to make sure that the thing didn't just make the answer up. I've found that this platform called Perplexity is actually the best one for that kind of thing because it not only gives you an answer, but actually gives you the links that it looked at. So you can then go and check, unlike ChatGPT, which is just like somebody who's spouting stuff at you and you have no idea.
It's like listening to us. All right. My thanks to Paul Downs, Jay Goltz, and Sarah Segal, and to our sponsor, The Great Game of Business, which helps businesses use an open book management system to build healthier companies. You can learn more at greatgame.com. Thanks, everybody. Wait, don't leave yet. If you have a question or a comment that you'd like the 21 Hats owners to address, send it to me by replying to your morning report or by email at lauren@21hats.com. That's LOREN@21hats.com. Do it now before you forget. And don't be afraid to tell Jay what you really think. He can take it. And if you got something out of this conversation, help us reach more business owners. Tell a friend. Subscribe and review us wherever you get your podcasts. Follow us on Twitter. Subscribe to the Morning Report at 21hats.com. This episode was produced by Jess Thuberon, founder of Blank Word Productions. Okay, now you can leave. Thanks for listening, everyone.